For more on finance, we're joined now by Rod North, Executive Director at Bourse Communications. Good morning.
Good morning.
Good morning.
How's the share market looking?
Well, I think seeing that the Dow's up 90 points, we might have a bit of a Christmas rally underway. It actually hasn't been too bad because really since sort of late November, we've seen our market edge up about 3.5% or actually 3.2%, which is actually quite a good move. So, I mean, there's some sort of expectation that we might just see, the last few trading days for the year, take us to an even higher point. It's been a long time coming, though. We've been waiting and probably still will be waiting a long time to get back to our previous highs back in 2007 of 6.8, where the market peaked.
Why the cheer now? What's in the last couple of days that's finally seen that little bit of an uptick?
You're starting to see a bit of concern, I suppose, about where the cash rate might be into next year, and I think that's perhaps going to predicate the fact that people are going to look for other avenues to put their money, and the share market, particularly industrial stocks, offer some pretty good opportunities, particularly with yield. So, with some of the predictions we're seeing coming from some of the banks, and in particular the ANZ yesterday, where it revised its forecasts for the cash rate into 2013 to come down to 2%, which would be another
full 1%.
Full 1%. And I think Macquarie Bank have joined them. A couple of the other major trading banks haven't quite gone to that extreme. But, I mean, the one thing that's obviously indicating is, and it is no coincidence, I suppose, that the ANZ Business Confidence Survey is out today, so perhaps they know a bit of what that might be revealing. But I think the concern is it's obviously also based on perhaps a weakening in the mining sector into 2013. We've already seen some of the signs of that. And then obviously the unemployment rate, which of course could create some concern also, and these factors, will sort of mitigate potentially to mean that the economy needs to sort of stabilise a bit more.
Yeah, we may get a clearer indication of where rates are going next year when the RBA minutes from the last board meeting are unveiled. Correct,
and that's going to happen today. We'll see the December policy minutes come out, so that will give us a sort of clearer picture of what the RBA and particularly the board, were thinking at that particular point in time when we saw that 25 basis points decrease to bring the cash rate down to 3%, which I think certainly helped a lot of people in the lead up to Christmas. And if it's any indication, I think if you see the amount of money that's being spent, I think it was something like 6.5 billion spent last week, and the forecasts for Christmas spending this week are 12 billion. So maybe that sort of helped people have a bit more cheer and go out and spend a bit of money and help sort of stimulate the economy from a retail point of view. Hope you've done that as well.
But beyond that, there's certainly not much hope in terms of retail sales picking up more in the long term.
No, that's correct. And I mean, look, the October figures, came in at only a 0.1% increase, which wasn't good. So, once all the wash-up of this occurs, and of course, bearing in mind that there's still a lot of sales happening over the internet, and a lot of people are still buying offshore and getting things, sent to their offices rather than getting out of the office. So all those things will mitigate, to perhaps not create the most rosy picture from a retail point of view, but I think there's a little bit more optimism there than perhaps we saw last year, thanks to that rate cut back in December.
Yeah, we'll wait to see that effect come through. It always takes a little while. Thank you. We'll keep an eye on the share market today.
And have a great Christmas.
And have a great Christmas too. Now, let's go to sport, and Paul Kennedy joins us for a chat about